Bitcoin's price has plunged sharply, intensifying volatility across the cryptocurrency market and raising fresh questions about whether the latest downturn marks a temporary correction or the beginning of a deeper slide. After hovering near record highs late last year, Bitcoin has fallen decisively below the $70,000 level, a psychological threshold that many traders viewed as a key support zone. The move has erased a significant portion of the gains accumulated during the 2025 rally and pushed prices to levels last seen more than a year ago. Please subscribe, like, and share for more. Thanks. The sudden decline has been accompanied by heavy trading activity, signaling widespread uncertainty and anxiety among investors. Market participants describe the current environment as one dominated by panic selling, with confidence rapidly evaporating as prices continue to fall. Bitcoin's weakness has also spilled over into the broader digital asset space, pulling down Ethereum and other major cryptocurrencies, and wiping out hundreds of billions of dollars in total market value. One of the most immediate drivers of the crash has been the unwinding of leveraged positions. Over the past year, many traders used borrowed funds to amplify bets on Bitcoin's continued rise. When prices started to slip and broke below key technical levels, exchanges automatically liquidated these positions to prevent further losses. This forced selling added fuel to the downturn, creating a feedback loop in which falling prices triggered more liquidations, pushing the market even lower. Macroeconomic pressures have further weighed on Bitcoin's performance. Global financial markets have entered a more cautious phase as investors grapple with persistent inflation concerns, higher interest rates, and uncertainty around economic growth. In such conditions, capital often flows away from speculative assets toward safer investments. Bitcoin, which is increasingly traded in line with risk-sensitive assets like technology stocks, has suffered as a result of this broader shift in sentiment. Institutional behavior has also played a role in the sell-off. Large investors who helped drive Bitcoin's rise to record highs appear to be taking profits or reducing exposure amid the changing economic backdrop. Signs of reduced institutional demand have left the market without the strong buying support that previously helped cushion price declines. Without that steady inflow of capital, Bitcoin has become more vulnerable to sharp swings driven by short-term trading and sentiment. Regulatory uncertainty has added another layer of pressure. While some governments have moved toward clearer frameworks for digital assets, others continue to debate stricter oversight. This lack of uniform regulation has kept many potential investors on the sidelines, particularly during periods of heightened volatility. For existing holders, the uncertainty has contributed to a more defensive stance, with many opting to sell rather than risk further losses. Investor psychology has been a powerful force throughout the downturn. Fear has replaced optimism, and the narrative surrounding Bitcoin has shifted from long-term growth to short-term survival. As prices fall, confidence weakens, and fewer buyers are willing to step in. This dynamic has amplified the decline, as even small negative moves have prompted outsized reactions from traders looking to protect capital. The impact of Bitcoin's crash extends beyond individual investors. Companies with significant exposure to digital assets have seen their valuations decline, and crypto-related firms are facing renewed scrutiny over their business models. Lower prices often translate into reduced trading activity, which can strain exchanges and other service providers that rely on transaction fees for revenue. Despite the severity of the current downturn, views on Bitcoin's future remain divided. Some analysts warn that further losses are possible if the market fails to stabilize, noting that previous crypto cycles have included prolonged periods of decline before a true bottom was reached. Others argue that the sell-off may represent a necessary correction after an extended rally, allowing excess speculation to be cleared out of the system. Supporters of Bitcoin's long-term prospects point to its history of sharp drawdowns followed by recoveries, emphasizing that volatility has always been a defining feature of the asset. They argue that underlying factors such as network adoption, scarcity, and growing awareness continue to provide a foundation for future growth, even if short-term price action remains turbulent. For now, Bitcoin remains under intense pressure as traders and investors watch closely for signs of stabilization. Whether the current crash proved to be a temporary setback or a more prolonged downturn will depend on a complex mix of market sentiment, economic conditions, and investor confidence. As the dust settles, one thing is clear. Bitcoin's latest slide is a stark reminder of both the risks and the unpredictability that continue to define the cryptocurrency market.